Hey everyone, welcome to What's Happening in Real Estate this week. I've got Conrad Zurini with REMAX Escarpment, REMAX Niagara, and Brian Hogben with Mission 35 Mortgages. Guys, like a lot of things happened this past week. Elections. We're coming up to the first of the month now, and so I just want to talk a little bit about the stats, and then we'll go on to what does this mean having Mark Carney winning the election? What's it going to mean in real estate? So Conrad, I'm looking at some of the stats, and now we know the Niagara stats are off a bit because of the amalgamation with Toronto Real Estate Board going into Niagara. But let's just start off in Hamilton. I think they're a little bit more accurate with Cornerstone. So it shows that year over year, they're down 19% in unit sales.
Yes.
And you know what? I didn't even look at the 2023 sales. Are we like is 2024 down from 2023 also? Were they?
Yes.
Yeah. So we've had a kind of a big decline. And Brian, I'm sure with everybody's feeling it, especially in the real estate industry.
Well, where we feel it a lot now is in the appraisal, right? And this has been a real big issue just as of lately too. It's like people who have been sitting on the sideline waiting to get a lower rate, waiting to refinance or renew. We just had one this week, 970,000 appraisal last year, appraised this year for 910. They wanted to wait. It's a mild decrease, but guess what? Now the financial plan that was put in place last year, gone out the window. Not enough equity to pay out all the debt. So, this affects these sales affect the appraisals for people on their renewal refinance right now too. So, you know what? If you got the appraisal that you're looking for right now and you're thinking about waiting, don't wait.
Yeah. Pay the penalty. Pay the penalty.
Yeah.
Yes, pay the penalty. Like use that equity, pay down that debt, pay the penalty. It's totally worth it because now think about that. That's a huge amount of money lost, right? For them and to get them back on track in terms of their debt consolidation. So that's unfortunate, but it's true, right?
Yeah, it is.
Yeah. So now, do you expect, Brian? Are you expecting maybe when's the next announcement for interest rate?
June.
June. So there's nothing month of May. Zero.
No.
Okay. So now, what's your expectations in June?
Well, there's twofold. They're saying again, it's always take this into consideration. There's fixed and variable, right? Fixed and variable, right? The fixed rate hasn't moved much, right? The fixed rate actually might even tick up a little bit now because Liberals talking about stimulus spending. So now we might see those fixed rates move up a bit more. The variable rate, they're still calling anywhere between 0.5 point and 3/4 cut, but I don't know. Do you know what I mean? Like there's a lot of indications that the fixed rates are at the bottom. So, and we've been talking about this for months and months and months. So that fixed rate might be at the lowest you're going to see, right?
Gotcha.
And if the variable goes down another quarter half, we're actually back into kind of normal interest rates. If it does, you might actually see the variable stay the same and the fixed rate continue to tick up because normally there's a variance of around 1.5.
Yeah.
You should have a risk premium on a variable rate. And right now we're just getting back to that.
So if somebody's got a renewal mortgage right now this month of May, what should they do? Variable? Just put variable?
I think it comes down to goals always. Right? I've learned a lot over the past 5 years.
Everybody's waiting. What?
We can't paint everybody with the same brush, gentlemen.
Yeah. I gotcha.
There's people that want to sleep at night and whatever. Like that bond, look, Brian is 100% right. People don't realize now that you're talking stimulus, then the government's going to need money. They're going to have to issue bonds. And then what happens is to issue bonds to make it attractive, the rates are going to have to pay higher. That means that borrowing across long-term rates are going to go up. So right now, I think we're to all talk about this window of opportunity was probably in the last prior to the election of long-term rates where I would have paid the penalty and moved on, right? And gone fixed.
I did that on a couple. And to your point, Rob, again, if you've got a sound financial plan, you're in the house that you want to be in,
the next 5 years at minimum.
Yeah, you're in a steady place. I love the certainty. personally.
Yeah.
I love the certainty, especially based on what we've gone through over the years. If you're high flying, lots of money, great budget, and you like the risk on the variable, by all means, you might fare better. You have in years ago, but that certainty right now, locking in rates in the low fours, high threes. My gosh,
I think it's good.
There's more upside risk. It can go up higher than it's going to go lower.
Yeah. I'd lock in. I'd lock in with that. There's no doubt. Conrad, the stats. What's going on out there? What's happening with the number? Like surprisingly, I'm surprised the spring market is not selling as more as it is. I'm surprised that the numbers aren't higher than they should be.
Well, it's that market compression piece, right? You know what I mean? I think that's where it's really at. And you know yourselves too, like you can feel it. You had a great March, right? You had a great March for sales. So I just think it's this confidence piece, calm confidence, and then we'll get back to consumerism. We're seeing, appointments were up significantly last week, right? So about 11-12%. We haven't seen an increase like that, like week over week in a while, which is amazing. I think now people are saying, look, I've sat on the sidelines, to borrow a page from Brian. I can't sit on the sidelines forever. I got to kind of move on. Yeah, I think you're going to see this prolonged spring, and it's going to be one of those years where don't go away this summer. Don't rent a cottage up north for 2 months, and you'll lose your business if you're a realtor or a mortgage guy right now. And everybody's got to be everybody's got to be available on Saturdays and Sundays and whatever, even the mortgage guys. And later, offers are being done. Some competition is happening. It's all hands on deck. Hey, can I borrow up to this amount of money? And I think people have to be ready for that impulse and what's going to go on. And that's how I see the market continuing. We're going to go we're not going into headwinds.
No,
I don't believe that. It's just a gentle breeze at our back. So remember that. A gentle breeze at our back that's going to bring us into the summer, into the fall. So yeah, totally.
What's the last time you've experienced? I don't recall a market like this. Have we ever experienced this in our careers, Conrad? Or even
no, but they're talking back. Some segments of the market are talking like 1994, 1995.
Okay. Yeah.
So which was a very interesting time. We've talked about this on this call. Like that was nothing like from 80. Like it went from 89 to 99 here, and about 89 to 97 before things started to go the other route. So I don't think we're gonna have to wait 10 years, but I think again, there's scarcity galore, but there's a lot of inventory. It's just that a matter of the demand has to meet some of the supply. But we're going to go into 26, 27, like with, we're down 20% in housing starts, right? Like we're 20% away from zero. Like that's crazy. Like for them not to be building anything.
I know.
So
I know.
That's got to be, maybe that won't be in the short term, but we're going to see that in the medium term. That's going to happen. So look, I'm a firm believer in I love your own. In Canada, we've got the great luxury of your principal residence and no capital gains.
Right.
And as long as these guys, and I haven't heard anything, like some people from other camps are saying that they're going to talk capital gains for a portion of your permanent residence. I doubt it. I didn't hear anything. No.
Yeah, all the truckers are going to go back to Ottawa and blow their horns there and going to stop that.
It's just fear mongering on the other side. It was tight. It was I don't know, like it was a statistical tie almost. I have to say, tight race. Really interesting times.
Yeah,
right?
No kidding. And more people came out to vote on this one since 1957. From my understanding.
I heard of more people pre-voting than ever.
Yeah. Oh yeah, ever. Yeah.
It was open before. Everybody I talked to had pre-voted.
Yeah, I'm curious. Yeah, that's crazy. So, okay, let's talk about what does this mean? Mark Carney winning the election. What does it mean in real estate? What's the?
Well, it's interesting because I talked about this last week. All their platforms. I got the most engagement about this, so people are very interested in this. I think it needs some time. It seems there's nothing on the financial world, right, Brian? You got left out of this thing. I think you know what I mean. There's nothing about really from mortgage perspective, which is cool. So I think that it's stable in terms of that whole piece of the puzzle in terms of CMHC and insurance and all that kind of thing. So that's kind of cool. Look, he's talking about, he knows there's not enough trades. They're going to pour a bunch of money into these prefabricated homes. I think it's not a dumb idea. But let's see how it yields. You know, some of the materials we do get from the States, I don't know, like, again, how the tariffs are going to play into this modular home thing. But yeah, that the Canadian government getting involved in development, yeah, they did it one time during the war when there was a crisis like this. You know, if they can pull it off with the help of prefabbed homes, and I guess you're talking about homes with no basements or something like that, because there's a big discussion about entry level detached. People want to come in at 350, 400 for a new detached, and maybe he'll accomplish that. It's a big thing. The HST, the GST up to $1 million and partial. It goes up to $1 million and it's partial to 1.5 million. I love that. I've been advocating for that for years. I think that's great. But again, it takes all levels of government. I think we need the provinces on path with this, and the municipalities as well. So yeah, I think he's got some things that are pipe dreams and some things that, you know, could happen, right?
For investors buying a second property, is that, you think he's gonna make it more difficult, like for secondary properties? And what about a guy that wants to buy a duplex? Maybe it's not going to be as advantageous unless you buy a sixplex or a 10plex instead. You know?
Yeah, I think they're going to go, and look, this is my opinion. I think they're going to, like, it's unfortunate, but that mom and pa landlord, I think they kind of got left out of this.
Yeah, they're going to be.
But I like,
they're going to be gone. Yeah. They're going to be gone in 20 years. They're all gone.
Yeah, and I think it is what it is right now. What you got, you got. It's going to be very hard to attain some more, because you know, I think the new mortgage legislation that came out is already out. I don't think we're going to see it restricted anymore, right? Hopefully not restricted, but it's definitely not going to get easier. I don't think they're going to ease any mortgage lending, to your point, Conrad, at all.
Yeah, and they're gonna, and you know what, they're gonna probably, you know, that whole thing is very contentious, Landlord-Tenant Act, and where people are, like, they get a lot of screaming and yelling from those, you know, smaller landlords. So this way here, it's a you know, this is a global idea. How do we eliminate all the complaining from the landlords? We're going to eliminate that small landlord. And you see with the MURBs, it's interesting, they're bringing back that 1970s MURBs thing.
Oh my God. I owned one of those back in the
Rob, you're showing your age,
90s.
Man. You're showing your age, buddy.
I bought one in Vancouver, North Vancouver. You had to take the C bus across, and you go up 4th Avenue. I owned a MURB. I can't believe I haven't heard that word. Fucking.
I know. So I had to look it up. You're right. But the thing is, so now they're saying large-scale apartment developers will be, if they do something in terms of energy efficiency, some of those costs you can write it off on your personal income tax.
Wow,
that's crazy.
So they're bringing back.
Come on. Oh my God. So let's start building multi-res. I've already built them.
Yeah. Oh, no kidding. So during the early 90s, Ontario was going through a heavy recession, but Vancouver wasn't.
No.
You know what? Now, and that helped me with my with my real estate portfolio. I ended up building a lot of equity on that property I bought. The MURB,
that's awesome.
The MURB I bought in Vancouver. I don't know what. I'm like 21 years old. I bought this MURB. I don't know what the hell. I just did it.
That's awesome.
And it helped me quite a bit get through the early 90s when things were kind of tough. But yeah, and also now builders and developers, you know, they'll probably, you know, help these guys a little more. First time buyers, I'm sure there'll be some relief with these guys, right? Borrowing conditions, fix everything overnight. So what about the when you corporations, when you sell something, you can reinvest? Is that going to come up to the table, or remember Pierre was bringing that to the table?
Yeah, he was talking about the States, right? You've got the carryover for your capital.
The carryover to reinvest without paying taxes on that.
Yeah.
Is that, you think that'll be looked at all, or you think that's gone?
You know what? Maybe multi-res. You might see that in the multi-res space. You're already seeing it like for like. It's already here. And so if I have an industrial building and I need a bigger industrial building, well, I don't pay capital gains on unless I don't reinvest it, but I don't pay capital gains. So if I got an industrial building, 10,000 square feet, and I sell it, make a profit, I can take that whole profit and put it into my new one at 25,000 square feet. So that already exists. It's just that with the U.S. one is a little bit more flexible. It's like if I own a plaza and then in like, upstate New York, and I want to buy multi-res in Florida, I can take my capital gain and within 6 months and bring it to my multi-res in Florida and not pay capital gain. So that I like.
Yeah.
You might see it just in a class. You might see it in a category with multi-res. You might see that. It's possible.
So
right?
my warehouse that I have my staging stuff,
Yes.
if I sell that at a profit, I can buy a bigger warehouse without paying the capital gains on it.
That's right. It's for your own business use. Yeah, absolutely.
Right.
Yeah. Mm-hmm.
Oh,
Yeah.
okay.
Yeah.
I didn't.
It's okay.
I had no idea of that aspect of it, and because just I don't know all the rules and everything of this.
As long as you're replacing it, as
Yeah.
long as you're replacing it, that's key. Right?
Get a good accountant, Rob. I got a referral for you, okay? If you need a good accountant.
Gotcha. So, guys, what else is happening before we end it? We're coming into
I think the market. I think we're seeing some like I said, a nice gentle breeze in the market.
Yeah.
I think people are look, everything's behind us now, and let's see after that meeting. Look, after the election, I don't know if you guys follow, because I like the S&P and I like the TSX.
Yeah.
If you read my blog, a little thing, I compare those two indices with housing. And what happened? The TSX, rebounded right after the election. So that's a precursor to what's going to happen in the economy, right? Because those guys read the tea leaves. Yeah. So I feel confident. I think real estate will follow very short behind. Yeah, definitely.
Awesome.
Good time.
Hey guys, thank you so much, and we'll catch you next week. And have a great weekend.
Thanks, Rob.